Hey everyone, welcome to the KE Report and a daily editorial with Brien Lundin, editor of the Gold Newsletter and our host down at the New Orleans Investment Conference. Brien, we're going to be talking precious metals as we usually do, but today is a quite positive day for precious metals. Starting off with the metals, gold on the futures market is up about $75, closing in on 28.50. And silver is up over $1 over that $32 level, right around 32.50. We're even seeing the stocks join in and outperform. You look at GDX, that's up over 4%. Same with GDXJ and SIL, Silver Miners ETF, that's up over 5%. Brien, I didn't necessarily see any specific news today that really caught my attention that I thought, wow, this just screams go buy gold. There was some U.S. economic data out. We have seen some central bank moves this week, not from the Fed, but from other central banks cutting rates. But overall, this move to me just seems encouraging for gold, silver investors because of the strong move in the breakout now that we are continuing to see in gold. Brien, what's your takeaway from the action today in precious metals?
Well, Corey, after you just recited that litany of good news, my reaction is I don't want to jinx it. Maybe we should stop talking now. But yeah, it's important to note, I think, that we've had some positive news. Overnight we had the ECB cutting rates. This morning in New York trading, we started off with a miss on the GDP number for the fourth quarter. We had pending home sales were disappointing on the downside. But I think all of these little data points, none of them are very compelling. I think, yes, they threw a little gasoline on the fire, but the fire was already lit. Gold started overnight in overseas trading and in Asia trading started rallying, and it just keeps building. Where this is setting a new record today as we speak. I think, as I've said many times before, in my newsletters, gold and silver just want to go up. There's a powerful undercurrent of buying around the globe that can't really be pinned down to any one big factor. I think there's just a general concern, a general unease regarding the fiscal situation in the US, the size of the debt, the enormity of the debt service costs in the US and really in a lot of developed countries around the world, and with corporations, the inability to service debts at current interest rates. And, why is the Fed intent on easing despite the fact that the economy is still doing relatively okay, that risk assets are still soaring? And I think the market is sniffing out that the Fed's stuck in a debt trap. They have to lower rates, and that there's a lot of things that are going to happen in 2025 that have been kind of bubbling and simmering in the background for a few years. It's a good time to own gold. And importantly, as you mentioned, the mining stocks are now starting to leverage the moves in the metals.
Well, Brian, you make an interesting point, and even Corey's intro about all these different factors. I find it interesting that in any commodity or in any sector, people are always looking for the silver bullet, the one reason things are going up or down today. And gold is a complex market, so are the mining shares, but there's a lot of moving parts. We just got out of the Vancouver Mining Conference kickoff with 3 different events where there was literally thousands of investors there evaluating companies, and now we're seeing gold move higher. Could it be something as simple as, hey, for whatever reason or combination of reasons, if gold is moving higher, most people are getting more bullish on that's going to affect margins, that's going to affect economics on development projects. Could it just be that some of the people that were at those conferences are hitting the buy button this week?
To some degree, I think that was encouraging. You both saw the same enthusiasm that I saw from the investors there. They all bought the story. They're drinking the Kool-Aid. They understand the reasons why gold is headed higher and is almost assuredly headed even further higher than this. But I think that market, even though we saw thousands of people there, I think that's a very small microcosm of the forces that are working on gold right now. It's just a drop in the bucket to the capital that's being deployed around the world in risk assets, but also in what's perceived as safe havens. And I think that's what gold reflects right now. If you look at the fact that gold has risen over the past year, really this new bull market is about a year old. And over the course of that year, we've seen many times when the dollar was rising and gold was rising, when the dollar was falling and gold was rising, when treasury yields were rising and gold was rising, and when treasury yields were falling and gold was rising. And the common denominator throughout all of that is that gold was rising. So regardless of these influences, regardless of what the dollar was doing or what treasury yields were doing, gold was always finding a reason, a rationale to rise. And again, I don't think it's that, as you say, that silver bullet reason why everybody's flocking to gold. I think there's skepticism on the inflation front, that it's going to remain subdued. I think the bond vigilantes are demanding higher returns from treasuries because they sense that the Fed is trapped here and needs to raise rates, but I mean needs to raise rates to fight inflation, but also needs to lower rates because of the debt service costs. So there's a lot going on, and I don't think that anyone can accurately predict what's going to happen, but everybody can be pretty confident that you're going to want to own gold and silver and leverage those moves through mining stocks over the coming years.
Let's talk about the mining stocks, because that whole concept of leverage from the mining stocks, it's been kind of an issue over the last run in gold, because stocks, some of them have greatly leveraged the gold price, but a lot have continued to lag. But at least this month, what we're seeing on GDX is leverage to the gold price. GDX just this month is up over 16%. It's gone almost straight up since the turn into 2025. That was after a pretty tough 3-month close to the year where gold put in a top early on in October and went fairly significantly down for those last 3 months. Brien, what do you want to see in the GDX chart broadly that you think could actually be encouraging for investors and actually show that sort of leverage that investors that buy the gold stocks are looking for over that gold price?
Yeah, I think more of the same. I think days like today where gold's up, well over 1%, but the mining stock indices are up well over 4%. That kind of leverage that is evidence of investors not just flocking to the metals, but you get that speculative money coming in and looking for some torque to the metals, to that macro picture. We have not seen that, and I think some of that speculative money is also technically oriented. They see that gold has broken through that flag formation, that kind of pennant formation that it traced out since the U.S. presidential election, where it was trading in a range and kind of an ever tightening range. And now it's broken through over the past week. It has decisively broken through that pattern and is headed higher. And again, is reaching record levels as we speak. I think that's going to attract the money, the speculative money that goes into the mining stocks. I have this belief, as it were, that 2025, this will be the year when the mining stocks actually respond and provide that kind of leverage that they have historically. But I can't really pin down a reason why I feel that way. Maybe it's because some of the air has been let out of the AI bubble. Maybe it's because some of the performances of Bitcoin shows that last big surge, that it can't advance on that. And we've had some very significant down days in crypto. And, the fact is, this sector is so small, we don't need mining stocks to be the next AI or be the next Bitcoin or whatever the next speculative flavor du jour is. We just need to get a little bit, a fraction of those speculative money flows into this very small sector to get an enormous price reaction. And that kind of a price reaction attracts more and more speculative funds. Gold itself is doing that. Gold breaking through technically and building that upside momentum, setting records, that's attracting more of that hot money to the sector. So it's all setting up very well for this year. It's been a great month so far for gold, and seasonality argues that we're going to see very good chance we're going to see a few more months of this kind of performance.
Yeah, so true, Brian. I think people forget or have amnesia that almost every year we see a pullback in December during tax loss selling. Well, really from November to December, which is what we saw at the end of last year. And we almost always see a surge in January. It's one of the best seasonal months for both gold and the gold mining stocks. But just from an economic standpoint, sticking with the companies, I think a lot of people were anticipating last year in Q2 and Q3 that we'd have more reaction in the larger producers. And while some did move, some, like the larger ones like Newmont and Barrick, did struggle. But now that Newmont's divested some of its projects and Barrick's getting its footing a little bit, I think a lot of people are also anticipating in the next couple of weeks we're going to start getting the Q4 production and financials from some of the producers. And a lot of people are looking at developers that have ounces in the ground and saying, holy cow, if we look at the sensitivity tables, some of the sensitivity tables only go up to 2,500 or 2,600. We're over 2,800. And if we keep blasting higher, if we see ourselves pushing closer and closer to 3,000, those economics on those projects start screaming. Could some people just be looking ahead to how good the economics are going to look on the producers and developers?
Yeah, a lot of great points there, Shad. On the majors, there have been some exogenous events like Barrick's experience in Mali. We've seen costs increase as the price has gone up because that's kind of what happens. Miners tend to, when the price of gold goes up, they tend to go attack some of those lower grade areas because they want to preserve the life of the mine and, frankly, their jobs. So costs tend to rise a little bit along with the gold price. In some cases, the biggest increase in costs for the big producers has been in royalties, precisely because the price of the metal has risen so much. But they are going to get their feet under them, and I think they are making a lot of money right now. And that has to be realized at some point. The juniors are going to benefit from that, and you bring up a great point. I've been focusing on those companies that were either optionality plays, big resources that are out of the market that are now wildly economic if they update to current metals prices. And more generally speaking, those projects that have large identified resources. Banyan Gold is one of the prime examples of that. That's starting to move now. It's being valued at $5 or $6 an ounce in the ground. It's lots of upside potential. And deposits like that have historically been sold for, 20 times that kind of valuation in the ground. Those are the kinds of situations you see out there right now. And if in a year or two, we are going to wish we had a time machine to go back and buy these bargains that are just lying around.
Brian, let's revisit these conferences and some of the stories that were catching people's attention, more individual stocks. One was Amarc Resources. They came out with a very good haul at the beginning of these conferences, and they were the talk of these conferences. Amarc is in the Toodoggone area of BC, pretty much right beside the Golden Triangle. A few other stocks in the area as well, especially TDG Gold, which also moved very strongly on the back of that Amarc result, and has more recently had Skeena Resources invest in the company. Let's talk about this Toodoggone area because we haven't touched on it, I think, ever with you. Seems like there's some good resources there, and it's not necessarily a new area, but it is getting more attention, and it's not quite as fractured up as the Golden Triangle is with so many juniors and explorers in the area. However, there are a handful of them. What are your thoughts on the Toodoggone area? Any history in that area?
Yeah, the geology is not that wildly different, obviously, from the Golden Triangle area. And you can draw trends however you like. You can look at the triangle, you can look at the horseshoe that kind of includes the Toodoggone area. And generally speaking, there are big discoveries to be made. This is a broad region of really messed up rock and a lot of different kinds of deposits to be found, a lot of different geology. The key here is having the financial resources to adequately explore. And that's why I was recommending Amarc for the last 2 or 3 years, because they had these remarkable joint ventures, up to $200 million from majors committed to their projects. And it finally paid off big time because as I told Diane Nicholson, the CEO of Amarc, in an interview that I did for one of these conferences, this would have been a major discovery, really headline making discovery that everybody would have been over the moon about at half the grade. So it's remarkable that they got shallow mineralization, gold rich mineralization over these kinds of intersections. And although they were able to rush 3 drills to the project at the end of the season, they were able to get a couple of fences drilled, and both fences, all those holes confirmed the original discovery hole. So it is very exciting. We saw the price of Amarc and their market cap soar on the news. I think given the potential size and special nature of this discovery, I think it's going to still be a stock that you're going to want to own. However, they're not going to be able to get back on the ground till May at the earliest. So I would peck away at it, watch it closely, and look for a better entry point over the coming months. TDG is another one. The discovery is right on the border of Amarc's ground. It looks like there's a very good chance it extends onto TDG, which also has a gold resource already, but it really soared. I have not recommended that company yet, but I am taking a hard look at it. I'm familiar with some of the people behind it, that it's a good group. And, I may end up making a recommendation there as well. It's just a good area, and it's good to see really compelling discoveries being made in this sector.
Yeah, Brian, and it's also just nice to see a little excitement in the sector. It was fun to be at the Metals Investor Forum and the Vancouver Resource Investor Conference, where people were talking about it and had a buzz, not just Amarc but also TDG. As far as these area plays, we could also mention the Thesis Gold is nearby. They've got 5 million ounces of gold. That's nothing to sneeze at. They haven't really moved in sympathy. But when you start seeing these area plays like TDG moving on the back of the news without actually putting out news, I think a lot of people look at it as they have 100% of their project versus the JV, but to drill down into these gold, copper, porphyry systems is expensive drilling. So for TDG, do they need to do what Amarc did with Freeport and have that strategic partner in there?
Yeah, people looking at TDG's 100% ownership as a big advantage. And yeah, it is an advantage to some degree. Amarc has the joint venture in place. That means they don't have to dilute any further. I think they have a 70-30 deal, and there's a lot of money going to go into the ground that Amarc doesn't have to raise in the market. Eventually, for these kinds of big copper gold porphyry projects, you need to bring in a JV partner to do the heavy lifting because they are so expensive to drill off and develop. So I think that eventually they are going to have to dilute either through joint venture or raising more money to really explore that. If I were them, I think they can raise some money now to poke some holes in there and increase the value before they have to sign a JV. So it is an advantage, but as you say, I don't think it is as much of an advantage as people may think.
Brian, do you have a game plan for these type of area plays, especially ones where the drilling season is limited? Because look, more interest is in the Toodoggone area right now. There are different companies you can invest in, whether it's later stage or earlier stage explorers. How do you play an area play like this that seems like, and who knows how it's going to play out, but seems like there's some momentum here?
Yeah, I think you really said it or implied it. It's an area that has a lot of potential and it's going to attract a lot of attention, but there are long off seasons. And that's a big strategy, is to invest during the off season, pick your entry points carefully as attention seems to wane. And as you approach the drill season, we often see share prices of these plays start to increase as excitement builds that they're going to get back on the ground. It's also a great time to look at financings and look at when paper's coming free in some of these plays. If paper's coming free in the middle of the winter when there's not a lot of excitement, that can create a good entry point. I don't know that that's the case for either of the companies we just mentioned, but it's something to look at more generally speaking. And, find the invest during the doldrums. That's a good time. Now, with that said, PDAC in early March tends to bring some excitement and interest to the sector. And you may want to try and beat that event and that kind of bump that we often see in the junior mining sector.
Well, Brian, you must be reading my mind. I was just going to ask you about PDAC coming up because a lot of companies do rush to put out news right before that conference, just like they did the kickoff this year before the other conferences. But to Corey's point, in the Great North in Canada, there's a lot of companies that are still in freeze up that really aren't doing anything. They may still be trickling out results from last year's program, but it's really going to be until the summertime before a lot of these companies start drilling again, at least May, but a lot of them June or July before they can even get back on the ground. Do you rotate your focus to other areas during this time period, post PDAC or leading up to it, that are maybe in other parts of the world, other parts of North America, or even in Mexico that are doing drilling year round?
Yeah, I'm not a very active trader either in my newsletter or personally, so I'm not quite that nimble to where I'm bouncing around the market here and there. I tend to look at stories individually and not thematically. That said, if you look at an area play like Amarc has just created, then TDG is an obvious first choice for closeology at the very least. But yeah, that's important. It's also why a number of companies that have these projects that can only be drilled in the summer in the northern latitudes, they often pick up a project in Mexico so they can keep the news flow going all year long. That's an advantage, but it doesn't necessarily mean that both projects are really worthy of investor attention.
Yeah, it's a good point, Brian. We'll see what comes out of this Toodoggone area. Seems like the geology is there and the mineralization. We just need, I guess, some of these assets to continue to move forward with good drill results and maybe get one of these things built. But again, that is a much longer lead time. But hey, Brian, so far, encouraging start to this year for precious metals investors, especially on the equity front. Again, Brien Lundin, editor of the Gold Newsletter and our host down at the New Orleans Investment Conference, happening this year, November 2nd to 5th. Brian, thank you as always for your time.
Thanks, guys.